So 2015, John and Elaine Daly. So we'll take a read through it now. So among the assets and liabilities of John and Elaine Daly, who carry on a mixed farming business on the 1st of the 1st, 2014, are land and buildings at cost €450,000, vehicles and machinery at cost €82,000, electricity due €330, value of cattle €60,000, value of sheep €24,000, milk cheque due €1,800, stock of fuel €620, and 3 months investment interest due €300. The following is a summary taken from their cheque payments and lodgements books for the year ended 31st of the 12th, 2014. So there's your lodgements and payments there. So the lodgements are on the debit side, the left hand side, and the payments are on the right hand side. And as you can see, you've got things like balance at the bank there, you've got milk, sheep, cattle, etc, 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 and then all your payments are here. The following information and instructions are to be taken into account. Number 1, value of livestock on the 31st of 12th, 2014 was cattle €75,000, sheep €23,000. Number 2, farm produce used by the family during the year, milk €750, lamb €580. Number 3, veterinary fees and medicines include a cheque for family health insurance for €1,500. 4, general farm expenses, fertiliser, vets fees and medicines are to be apportioned 70% to cattle and milk and 30% to sheep. 5, other expenses and costs are to be apportioned 75% to general farm and 25% to household. 6, depreciation to be provided on the following: vehicles and machinery at the rate of 10% of cost per annum, buildings at 2% per annum. Landed cost was €175,000. 7, on the 31st of the 12th, 2014, a milk cheque for €1,500 was due. Creditors for fertilisers amounted to €450 and stock of fuel was €560. Required: A, prepare a statement of capital for the farm on the 1st of the 1st, 2014 for 20 marks. Part B, prepare an enterprise analysis account for cattle and milk and sheep for the year ended 31st of the 12th, 2014. C, prepare a general profit and loss account for the year ended 31st of the 12th, 2014 for 10 marks. Part D, prepare the Daly's drawings account for 5 marks. And E, Part 1, for what purposes does a farmer prepare a general profit and loss account? And Part 2, outline the advantages of preparing farm enterprise analysis accounts for 5 marks. So 60 marks altogether. So Part A, prepare a statement of capital for the farm on the 1st of the 1st, 2014 for 20 marks. So basically what you have to do here is look and see what all of the assets and liabilities of the farm was on the 1st of the 1st, 2014. So the 1st of the 1st of the current year. Okay, so we're going to look and see at the top of the question. So it says among the assets and liabilities of John and Elaine Daly are, so you've got land and buildings, that's an asset, vehicles and machinery, asset, electricity due is a liability, value of cattle is an asset, value of sheep is an asset, milk cheque due is an asset, so that is a cheque that is due to come into them for having sold milk previously, so that's an asset. Stock of fuel is an asset, and 3 months investment interest due is also an asset. So we throw them into statement of capital, so it's just a list of all of the assets, and then we're going to take away a list of the liabilities away from that, and that will be our reserves on the 1st of the 1st. So we go and we look back at the question. Now, it did just said that among the assets and liabilities include. Now, that is not an exhaustive list. So what we want to do now is scan through the rest of the question and see if there are any other assets or liabilities hiding out in the question. So if we can see, we'll look at the lodgements and cheque payments first. If you can see on the lodgement side, we have balance on the 1st of the 1st. So that is a bank balance. It is on the debit side, so that is an asset. So 27,200 is an asset. So I'm going to put the ones that we discover not at the start of the question in blue, just for that stand out for you. So, are there any other assets or liabilities? Well, if we look down at the lodgement side, we already have a clue up here, but if we look down the lodgement side, we see here interest from 3% investment bond here. Okay, so that is investment income. So we obviously have investments, but we knew that already from up here. It says 3 months investment interest due. Okay, so at the start of the year, we were owed some investment interest from last year. Now, we received 600 here. Okay, so interest from 3% investment bond. Now, if I look down at the end of the year, I don't see anything else about investments. So what I have is €600 that I received during the year, but 300 of that will relate to last year because that was due at the start of the year. So therefore, the investment income, right, for the year is 300. So if I divide €300, which is investment income for the year, on 3% investments, if I divide 300 by 3, multiply that by 12, okay, that is 1,200. Okay, so looking back at here, 3 months investment interest. So the investment interest for 3 months, 300, therefore 1 month, as we see here, is 100. Multiplied by 12 months, 1,200. And that is 3% investments, as I've already said. 1,200 divided by 3%, multiplied by 100, gives us 40,000 investments. Okay, so that's 40,000 investments there that we have. Okay, back to our question then, and we're looking for any other assets or liabilities. So you'll see here I have this purple arrow pointing to bank loan plus 18 months interest at 6% per annum on the 30th of the 4th, 2014. So why is this a liability at the start of the year on the 1st of the 1st, 2014? We don't see the 1st of the 1st, 2014 written here anywhere. No, but what I do have is the 30th of the 4th. And it says bank loan plus 18 months interest. So if I am repaying a bank loan along with 18 months interest on the 30th of the 4th, I obviously had that loan and I had interest that I had owed on the 1st of the 1st, 2014. So this 21,800 is my 100% loan plus 9% interest. Now, where did I get 9% when it says 6% here? Now, so 9% is the 6% per annum, so 6% by 1 year multiplied by a year and a half. So that is 18 over 12 months, so that's a year and a half. So therefore, 21,800 is equal to 109%. So I know what 109% is. What is 100%? So 21,800 divided by 109 multiplied by 100 gives me my €20,000 loan. If my interest is 9%, that is 1,800. So altogether that's my 21,800. But what I need to think about now for this part A is how much loan interest did I owe on the 1st of the 1st, 2014? Well, if I'm repaying it on the 30th of the 4th, okay, that's 4 months, I obviously had it for 14 months before the 1st of the 1st, 2014. So 1,800 divided by 18 months multiplied by 14 months is equal to €1,400 that I owed on the 1st of the 1st. So throwing those figures then into the liabilities, amounts that I owe. So my assets in total are €685,920. My liabilities in total are €21,730, and that leaves me with capital on the 1st of the 1st, and that should say 2014, okay, is €664,190. So that is my part A complete for the 20 marks. Now moving on to part B, prepare an enterprise analysis account for cattle and milk and sheep for the year ended 31st of the 12th, 2014, and that's for 20 marks. Now, all that these accounts are is basically telling us, did the cattle and milk on the farm earn the farmer a profit or loss, and did the sheep on the farm earn the farmer a profit or loss as well. So it's basically just bringing all the information from each of the different enterprises, so the 2 enterprises that you're asked about there, and just coming up with a profit or a loss figure for us. So what we're going to do, we'll do the cattle and milk first. So what we need to do is look through the question and just have a look out for anything got to do with cattle, milk, calves, whatever the word might be in association with cattle, cows, whatever it might be. Okay, so we see at the top of the question we have value of cattle 60,000. We have milk check due 1,800. We have in the lodgement side we have milk 29,000. We have cattle 14,000. We have calves 6,500. We have single payment, which is a grant from the government, 3,500. On the payment side, we have dairy wages, so we paid somebody for milking the cows for working in the milking shed. We have cattle, 12,600. We obviously purchased cattle there. Then we have value of livestock on the 31st of the 12th, 2014 was cattle, 75,000. We have farm produce used by the family during the year, milk, €750. And we have in part 4 there, general farm expenses, fertiliser and vets fees and medicines are to be apportioned 70% to cattle and milk and 30% to sheep. So we're going to put 70% of those 3 expenses into our cattle and milk enterprise analysis account here. And then lastly, we have in number 7, on the 31st of the 12th, 2014, a milk cheque for 1,500 was due. Okay, so starting with the income first of all. So we'll go at the start here in the lodgements, I'd say. All right, so milk here we have 29,000, okay, and then at the start of the year we had a milk check due. So when did we sell that milk? It would have been last year if the milk check was due at the start of the year. So therefore we're going to take last year's figures out of this year's account. So minus 1,800. Then we look to the end of the year and see is there anything about milk checks at the end of the year. So on the 31st of the 12th, 2014, a milk check of 1,500 was due. So that relates to this current year, 2014. So we add that. So altogether, our milk, 28,700. Then we're going to look at cattle and calves. So the cattle here, we have received money from sales there, so 14,000 and 6,500 is 20,500. Then we have our single payment of cattle, 3,500. Then we're going to move over to the payment side and we have dairy wages, 2,600. And then we have sale of cattle here, 12,600. Now, the value of livestock on the 31st of the 12th. Now, we had this underlined up here, value of cattle, 60,000. So you can do this first or you can wait till you get down here. It doesn't matter. But if your value of your livestock has increased since the start of the year, you are going to treat that as an income. So this value of cattle has increased by 15,000 since the start of the year. So that is increase in value, 15,000. That is an income. If it decreased in value, it would go into expenditure. Okay. Farm produce used by the family during the year, milk, €750. That is drawings of milk, €750. All right. Drawings is treated as income as the farm has produced this goods. Okay, so it is income. It's like sales. All right, and then we have our general farm expenses, fertiliser and vets fees have to be apportioned 70% to cattle and milk. So this is the last thing that we have to do here. So general farm expenses, we have up here 14,200. All right, there are no workings on general farm expenses here and nothing else here. So it's simply just our 14,200 multiplied by 70%, which is 9,940. Then moving on to fertiliser. Our fertiliser up here is 2,500. Now, there is nothing about fertiliser up here, but down below we have information here. Creditors for fertilisers amounted to €450. So at the end of the year, we owed creditors for fertilisers €450. So therefore, that relates to this year. So 2,500 plus 450 multiplied by 70% is €2,065. And then the last thing that we have to do is the vet fees and medicines. That's the last thing that we have to split up. So vets fees and medicines are here, 2480. Now, what is the minus 1500? Well, if we have a look at note 3, we see that vets fees and medicines include a cheque for family health insurance for 1500. So that is drawings, which we will put into our drawings account later. So 2480 minus our drawings of 1500 multiplied by 70% is 686. So altogether, we have a profit on the cattle and milk, €40,559. Next, we're going to do the enterprise analysis account for the sheep. So we shouldn't be spending an awful lot of time with this because, see, there's not an awful lot of marks associated to it, but there is quite a lot of work to do. So quickly, we're identifying all of the information about the sheep. So value of the sheep, we'll compare it with that later on, so we'll have a look at that later. So sheep and lambs, 28 and 10.4 is 38,400. We've got the grant, the single payment for the sheep, 2,100. Then we got payments for wool that we sold, 1,400. Now, reading down through the question, there was nothing else about wool, so that goes straight in there as well. In the cheque payments, we have the sheep, 18,500. Now, let's look at the value of the livestock. Well, value of sheep at the start of the year, 24,000. Value of sheep end of the year, 23,000. That is not a good situation. Our sheep has reduced in value. So that is a decrease in value, 24,000 down to 23,000. That is 1,000. Now, then in our next one, farm produce used by the family during the year, lamb, €580. So that is drawings, €580 there. And then we have to split up the different expenses there, the 3 that we were told, 30% of them is going into the sheep compared to the 70% that went into the cattle and milk. So overall there, we've got a profit on the sheep, €17,541. Now, so part C is prepare a general profit and loss account for the year ended 31st of 12, 2014. So 10 marks. So very few marks here. We have to fly through this. So basically, whatever did not go into either of those enterprise analysis accounts will have to go into the general profit and loss. It's the general farm one. So anything that didn't go into the other two. But we will bring across the profits of those two straight in. So profit from the cattle and milk, 40,559, and profit for the sheep, 17,541. Now, I have ticked off all of the items that we have already used and put in, okay? The first thing then that we have yet to tick is our forestry premium, which is a grant that's given to farmers for planting forestry on their land. So that's €1,800. And then we have to put in the investment income for the year. So the 40,000 investments multiplied by 3% works out at €1,200 for the year. Or you could also work it out from this. 3 months investment interest due is 300. So 3 months is 300. So therefore 12 months is 1,200. So then we look at the light and heat. So light, heat and fuel. Okay, quite a few figures here. Let's see where we get them from. So I have the light, heat and fuel, the 2,210 for the year. But now my electricity due at the start of the year, that relates to last year. So we will minus that 330 there. The stock of fuel at the start of the year, that is an asset at the start of the year, but we will use that this year. So we plus that 620 here. And then, okay, down the last note there we have stock of fuel on the 31st of the 12th was 560. So at the end of the year, we had stock of fuel 560. We did not use that this year, so therefore we minus it. Now, you'll see I am multiplying that by 75%. Why is that? So it says here in note 5, other expenses and costs are to be apportioned 75% to general farm and 25% to household. So we're going to put 75% into this general P&L and we're going to put 25% into the drawings. So that's that done. So then next thing that's free, so machinery just goes in the balance sheet. We do not put this 6,200 anywhere, but it will impact our depreciation later on. So our repairs, €5,000. So there's no notes about repairs here. There's no notes about repairs here apart from that we put 75% of it into the farm. So 3,750. 3750. The other 1, 2, that should be 5,000, sorry, by 75%, 3750. Now, the next thing then is our loan interest. So earlier on we worked out that 1,400 loan interest was due before the 1st of 1st 2014. So therefore, 2014, there should be €400 relates to that. So loan interest, €400 multiplied by 75% is €300 there. Okay, so that is the loan interest done then. So then we have depreciation for vehicles and machinery. Okay, so we're told depreciation to be provided on the following: vehicles and machinery at the rate of 10% of cost per annum. So we have vehicles and machinery up here, €82,000 at the start of the year. And then we have this 6,200 that was purchased during the year. So altogether, that is €88,200. So €88,200 by 10% by 75% is equal to 6,615, and we'll put the other 25% into the drawings later on. So that's 6,615 there. Now, next we have to do our buildings at 2% per annum, and it says land at cost was 175. Why are they telling us that? They're telling us that because land does not depreciate. So we must take away that 175 from the cost of land and buildings at the start of the question. So depreciation on buildings, 450,000 minus the land, 175, is €275,000. 275,000 multiplied by 2% per annum multiplied by 75% is €4,125. So tot them all up, and then I have a P&L balance 31st of the 12th 2014, €44,855 is my P&L balance then. So that is that part. Part D then is prepare the Daly's drawings account for 5 marks. So you could be doing this at the same time as you are doing like the rest of the question, or you can wait till the end and just throw in all of the others. So note 2, you've got the drawings of milk and lamb there. Note 3, you've got the health insurance for 1,500, and then in note 5 you've got all of the other general farm expenses. So you're multiplying all of those by 25%. So the light and heat 485, the repairs 5,000 by 25 was 1,250. You've got the loan interest, 100 out of the 400 was for drawings, and then you've got the depreciation on vehicles, and you've got the depreciation on buildings. Now you can pause the video if you want to take down those workings, but you should have got them from the last slide. So altogether 8245 in the drawings account, and on the credit side then you can just write capital 8245. Now part E then, number 1, for what purpose does a farmer prepare a general profit and loss account? And part 2, outline the advantages of preparing farm enterprise analysis accounts. So that's your sheep and lamb and your cattle and milk accounts. So part 1, for what purposes does a farmer prepare a general profit and loss account? To ascertain the overall profit or loss of a farm. Expenses or gains that cannot be allocated directly to the individual farm enterprises are included in this account. Number 2, outline the advantages of preparing farm enterprise analysis accounts. This allows better planning and decision making, and resources can be diverted elsewhere if necessary. Preparing farm enterprise analysis accounts allows costs to be allocated to the relevant individual activity within the farm. The farmer can find the profit or loss of each individual farm activity. The contribution of an individual enterprise towards total profit can be seen. Now, how could they make this into a 100-marker question? Well, they could obviously make a lot of the adjustments a little bit trickier, which you should be able to manage, all right, but they could also add a balance sheet. So just looking at this question in particular, we had 2 fixed assets there. We had land and buildings, €450,000, and the depreciation on that 5,500. There was no depreciation prior to the 1st of the 1st 2014 this year. So net book value 444,500. And then your machinery cost, 88,200, and your accumulated depreciation was just the depreciation for this year, and then that is a net book value of 79,380. So they had 3% investments, €40,000. Current assets, always think about your investment income due, all right? So the investment income due, we should be getting 1,200 for the year. We have only received 300 for the year. Now we did receive 600 in the year, but 300 of that was for the previous year. So therefore that means 900 is yet to be received. The bank, we have 36,410. Now that is on the credit side, at the bottom of the credit side of the receipts and payments account. So that will be brought down on the debit side then. We have stock of cattle, 75,000. We have stock of sheep, 23,000. We have stock of fuel, €560. And we have milk check due, €1,500. In total, all of those assets there are €137,370. Now, we less the creditors. So the creditors for the fertilisers is the only current liability, or creditors minus 1 year, that we have, is €450. So that is total net assets of €136,920. And that is €700,800 in total. That is financed by our capital, which is from Part A, €644,190. Our profit and loss balance, which is 855, minus my drawings of 8245, and that is my €700,800.